And it's the last edition for this week. Welcome to Business Morning. I'm Ladi Williams.
And I'm Chimeze Obi. Well, thank you for joining us. Well, urea fertilizer from the Dangote fertilizer plant is expected to hit the market from today, June the 11th, in commercial quantities, signaling an era of liberalization in the fertilizer market. The $2.5 billion plant, which boasts of 3 million metric tons yearly production capacity of urea, is the biggest fertilizer project in the world. Recently, the chairman of the Dangote Group, Aliko Dangote, says the urea production from the first phase of the project will help in shoring up foreign exchange for the country.
And now to the global oil market. Oil prices slipped this morning, but were set for their third weekly rise on expectations of a recovery in fuel demand in Europe, China, and the United States as rising vaccination rates lead to an easing of pandemic curves. Brent crude futures fell 23 cents to $72.29 a barrel, reversing most of Thursday's climb to its highest close since May 2019. U.S. West Texas Intermediate crude futures slipped 22 cents to $70.07 a barrel after climbing 0.5% on Thursday to its highest close since October 2018. Brent is set for a gain of 0.5% this week, while WTI is set to climb 0.6%.
In the meantime, Nigeria produced 1.34 million barrels of crude oil in May, about 28,000 barrels daily production decline from outputs in April. According to OPEC's monthly oil market report, Nigeria and Angola registered the largest declines in production within OPEC amid the rise in crude production by 390,000 barrels per day, fueled by the gradual easing of production cuts. It adds that the global oil demand growth this year remains at 6 million barrels per day, with total oil demand at 96.6 million barrels per day.
And Nigeria's proven natural gas reserves currently stands at 206.53 trillion cubic feet as of January the 1st, 2021, rising by 1.66% year on year. And that's according to the Department of Petroleum Resources. Speaking at the 2021 Nigeria International Petroleum Summit, the DPR's director, Mr. Sariki Awalu, says the growth in gas reserves remains critical to achieving the Decade of Gas initiative of the federal government. Do take a listen.
Making gas a commodity, it encourages explorers to explore more of gas, because right now, gas before now is not taken as commodity, it's taken as a byproduct. So now it is commodity, it has value, so people really explore more. But most importantly, reservoir studies. That really encourage people, because we study the reservoir to see how much can we really improve the recovery. So the improvement of the recovery bring about additions of reserve.
While still talking about the International Petroleum Summit, it was the focus was mainly on technology, knowledge, sustainable, and a partnership that can enhance the inflow of foreign investments while improving success rates of indigenous business engagements. The summit, which ended yesterday, was expected to come up with strategies and new approaches to the future of the hydrocarbon industry and how to return the attractive industry performance to pre-pandemic era. How achievable is this, and what are the issues? Biodun Adesoya, CEO of DG Connect Limited and the past president of the Nigeria Association of Petroleum Explorationists, joins us in a moment. Keep it here with us. This is Business Morning. All right, we're being joined by Biodun Adesoya now to take us through some of the issues in the oil sector here in Nigeria. Thank you very much, Mr. Adesoya, for joining us on the program. Good morning. Good morning, Mr. Adesoya.
Thank you very much. Good morning.
Right. So coming at a time when the global economy and Nigeria in particular is trying to find its feet after the global pandemic in 2020, how important was that the just concluded Nigeria International Petroleum Summit?
It's very important because it's coming on the back heel of what I would consider a very challenging year. 2020, as you know, particularly every sector of business and the oil sector inclusive, But so it's very important. It's very important that that summit held, and it's very important that discussions are brought forward on issues on how we can accelerate a return back to normalcy in the business of the petroleum industry.
Well, the summit was meant to come up with some strategies and new approaches to bring back the industry to its pre-pandemic era. As an industry player, what for you is critical at this point?
The restoration to normalcy, if we could at least come back to the pre-pandemic era in terms of the production, in terms of activity level, in terms of investment levels and all, it will be fantastic. Of course, restarting oil fields and getting back to normalcy can take some time as well. It's always very easy to switch off, but when it comes to switching back on, that could take some time.
All right. One of the assumptions by the World Bank for Nigeria's forecast is structural reforms in the oil sector. And one major issue that made headlines from this summit was the PIB, which is the National Assembly has promised to pass this month. Do you see this happening anytime soon, considering the politics that surrounded the passage of this bill?
I'm sorry. The petroleum industry bill remains a critical document that needs to come alive, and that obviously has significantly slowed down and affected the sector in so many ways. Its passage is critical. The other issues, of course, has to do with what is the global trend at the moment in terms of the relevancy of fossil fuel. We need to be mindful of that. Therefore, in my opinion, timing is critical. And the sooner we can get back on track, the better for Nigeria.
Seen the rest of the world making moves towards renewable energy. Where is Nigeria in all of these, and for how long are we going to rely on fossil fuels?
Reliance on fossil fuel will still be with us for a while, one, because we haven't even maximally exploited it for our benefits as a country, and two, the technologies that we speak about are evolving, and at the moment, a number of them are still quite expensive, but I know that progressively they're getting cheaper. My opinion is that we have to use what we have in order to solve our problems. We still have power problems, we still have refining challenges. Of course, all these are currently being addressed with the Dangote refinery and the other refineries that are coming on stream. But at the moment, as I'm speaking to you now, those problems still exist. And I would definitely say that we don't have to be an early adapter or adopters of this global trend when we obviously have a resource bountiful with us and we haven't even maximally utilized it for the benefit of the country and our people.
All right, Mr. Adesanya, but production costs is another critical issue here. Can you tell us why the cost of production is high in the first place?
The reason why it's high is simply because of Nigeria. There are production costs are coming down in most climes of the world. The Niger Delta, where bulk of our production is coming from, is already a well-known, well-explored, well-understood sedimentary basin. Therefore, ordinarily, the cost should be down. But what we see are the non-technical costs, because you have to divide the cost into two. You have the technical cost, you have the non-technical cost. Our non-technical cost still remains high. Things like the security issues, repairs and restoration of vandalized facilities, community issues, and all of that. Those costs are still very high in Nigeria, and they haven't been affected by the fluctuations that we noticed in the oil price. Whereas on the technical side of things, when the cost fluctuates downwards or goes, when it goes downwards, the tendency is for the companies to approach the service providers to also scale down their costs. But you don't get to see that in the non-technical cost side of things.
Now, the contracting cycle, in Nigeria has also been fingered as one of the reasons for high costs of crude oil production. How can this anomaly be corrected?
It simply have to be corrected. It can be corrected by simply improving the efficiency of the people doing the contracting itself. Contracting from the NNPC side through the NIPEX process, contracting from the companies themselves, the NCDMB, there are processes. This has to, because one thing that is quite common is that you have a scenario where certain opportunities, certain activities are basically tied to time. And when you lose that time, you lose the benefits as well. And that has been a common occurrence in this contracting cycle. It needs to be tightened simply by becoming more efficient in the way those contracting processes are carried out.
All right, so the NNPC plans to reduce cost of productions to $10 per barrel. Is this achievable, and how soon can it be achieved?
It's achievable if the heart and the mind goes into it. It's very important that in making that kind of setting those kind of targets, due process in-house has to be looked into. In terms of timing as to how soon it can be achieved, it can be achieved I would say that once the building blocks are in place, once they themselves take those conscious steps to ensure that they do what they need to do in a very smart, very quick manner, then we should obviously have a much quicker achievement and attainment of that kind of target. My take is that they will have to do a little bit more, especially from their end. The operating companies are businessmen. They are very eager. They always want to quickly put in their money and make the maximum profit they can make. And the onus is on the partner to follow suit. And in this case, most of the time, it's NNPC.
Before now, oil-producing countries are not so many, but today many African countries are discovering and producing oil. So there is a lot of competition. How do we attract the international oil capital into the country?
We just have to remain competitive. We have to look beyond oil and look into the country at large. We have to improve so many attractive indices that will bring businesses into the country, ease of doing business, security, infrastructure, and so on and so forth. So we just have to improve all those things and then look into our banking system, our regulatory system, the DPR and all of that, and ensure that we have what I would call a very competitive regime to attract investments into the country, into the sector in particular.
All right, still talking about making it attractive. What do we need to do to encourage Nigerians to enter into the upstream business?
Nigerians already been encouraged, especially from, the businesses of twofold. There's the service side, there's the exploration and production side. The service side, through the act on the national Nigerian content, we've already started seeing Nigerians participating in offering services, and they've been improving in the quality of their services ever since 2010, when that law came into effect. The E&P side as well, the operating side, we've seen the likes of, we started off with marginal fields in 2003, and then we went on to some awards of oil blocks directly to Nigerians. And then we've just, as recently as last year, initiated the 2020 marginal field bid round, which is almost at the concluding stage right now. The letters of award were made last week, Monday, to the winners. So these are real great efforts at bringing Nigerians in, and Nigerians are already in. You have the likes of Seplat, you have the likes of Walter Smith. These are companies that started off as marginal fields, and they've grown into bigger companies with bigger capacities, and they're doing stuff real big right now.
Now, with the global oil price inching higher, what opportunities would you consider open, not just for NNPC, but for companies operating in the upstream oil sector?
Oh, basically, the opportunity will be more revenue to them, but as much as possible, they have to optimize in their activities, in their operations. They have to ensure that they are able to produce more at this time, and then explore more as well for the future. The oil business is used to these sinusoidal waves whereby the oil price goes up and it comes down and so on. So that's the time we're in now is the time when it's kind of going up. We hope it continues to go up a bit more, but definitely at some point in time in future, it will come down. So those that survives the best are those who are able to plan and to mitigate those times when the oil price comes down.
So you talked about looking beyond oil. Now, part of the conversation at the summit has to do with, gas. And of course, I know that Nigeria
Yes.
is actually big when it comes to gas. So how will this play a role?
That's correct. Basically, yes, gas is very important commodity now in our national life. We need it for power, we need it for petrochemicals, we need it for so many industries and so on. It's critical because it's a fossil fuel that is cleaner than oil. And because it's cleaner than oil, it's more attractive. So we're going to see investments more in gas development and gas commercialization. We have to, therefore, strategically, the companies have to begin to look at producing more of gas reservoirs rather than oil-bearing reservoirs. There are quite a lot of gas fields in Nigeria that were not developed simply because at the time they were discovered, it wasn't an attractive commodity and there were no infrastructures to develop them. But now the infrastructure emphasis is being placed at the top down to ensure that gas development takes a center stage, and more especially as a strategic national development aspiration.
We do appreciate your time, Mr. Adesanya, this morning. Thank you very much and enjoy the rest of the day and, of course, enjoy the weekend.
Thank you very much, Chimeze.
After the break, we'll look at issues around the currency market as House of Reps calls on the central bank to check further devaluation of the Naira. To stay with us.
And at a plenary this week, the House of Representatives asked the Central Bank of Nigeria to urgently put in place a policy to check further devaluation of the Naira to the dollar and other international legal tenders. The House says while the Nigerian currency was losing value, others in other African countries were actually appreciating. The question many would ask is how much of this is the fault of the central bank and what do they expect the central bank to actually do? Tajuddin Ibrahim, head of research at Chapel Hill Denham, joins us now. Thank you for joining us, Ibrahim.
Thank you for having me.
Good morning. Well, the House of Representatives has asked the CBN governor to put policies in place to stop the devaluation of the Naira. What do you make of this?
Well, I think, it is good that the House of Rep is concerned about the devaluation of the currency, but it is not that straightforward for the CBN to put in place policies that could stop the depreciation of the currency. What I believe is that it is about the fundamentals. It is about the economic fundamentals, and the CBN responds in line with the economic fundamentals. Let me give you an instance. Nigeria, for example, had a trade deficit last year. So with a trade deficit, you wouldn't be expecting any accretion to your reserves. At the same time, when you are not seeing much of inflows in terms of foreign direct investment and also foreign portfolio investment, you wouldn't be seeing any accretion to your reserves. So we have to consider, the macro elements and, bear in mind that the CBN always acts in the best interest of the economy. There is little that the CBN can do in the current situation because we have so much depleted the FX reserves as we speak at $34 billion. So the best is to consider the basics, the foundation, and the rudiment of the macros that support FX supply to the markets.
Right. Talking about economic fundamentals, because when I saw that story, what came to my mind was, okay, what would they want the central bank to do when the fiscal authorities don't seem to be doing their own part? I mean, you did mention macroeconomic fundamental. Is it that they are not thinking that the fact that the fiscal authority really has a bigger role to play in all of this?
So I wouldn't say that they are not thinking that the fiscal authority has a big role to play in currency stability. But I think what is missing is the focus of the government on the right thing to do. And in this case, I strongly believe that the focus should be on infrastructure, investing on infrastructure projects that could, number one, support the production of goods and services. Number two, provide employment, for the youth and also for everybody, looking to be employed. Number three is to create an enabling environment for businesses, generally speaking, to thrive. So if you take a look at the pressure that we are seeing on the currency, it is on the back of the weak fundamentals that I have just mentioned now. Let me put it in context. We import raw materials for the production of some key food items in this country. Why can't we produce them locally? We import some also, food items that are ready for consumption on the spot into this country. Why can't they be provided locally? They wouldn't actually be provided locally because of the high cost of production for most of the companies that produce these goods and services. So you have power to deal with, for instance, the high cost of generating your own power as a business wouldn't encourage many businesses to operate and encourage the patronage of Nigerians instead of looking outward. So these are the elements that I believe the government should be focused on. If we have infrastructure that will enable the transfer of goods that are produced in the farm to the cities where they are consumed, I strongly believe that import to a large extent will reduce. But if before getting to the cities where they are consumed, most of them have perished, then where do we expect us to fill the gap in terms of the supply-demand gap? It is largely speaking going to be via import. And there'll be a lot of demand on that window, and there'll be a lot of pressure on the Nigerian Naira. So the government on their part should look to fix the problem that we have with infrastructure. Then we will have job creation. Then we will have, more, demand for Nigerian good for the goods that are made in Nigeria instead of looking outside for imported goods, in my view.
All right, so the lawmakers cited the performance of other African currencies, such as the South African rand and the Ghanaian cedi. Is there room for comparison here, considering the economic policies of these two countries?
So it is hard to understand that we should be comparing these countries with Nigeria because if you bear in mind their own fundamentals are different from ours. Let us start from the FX reserves. The reserves for this country is largely speaking dependent on the movement in oil prices. But if you take a look at Ghana, they depend less on crude oil price movement. So it is a combination of gold as well as crude oil for them, as well as cocoa in this case. So they have up to like three key elements that allow dollars to flow into their reserves, while we have, largely speaking, only one commodity. Let us talk about South Africa. South Africa has gold as well, and they also have other non-oil related commodities that support their own FX reserves. So this, largely speaking, explains, why we are having the South African rand, performing better than the Nigerian naira as we speak. There are two other, factors that are responsible. Number one of them is that, the South Africa has, trade surplus as we speak, while for us we have trade deficit. So we can't really compare ourselves or the two countries on that basis. The second element to my mind is that in South Africa, we are seeing increased inflow of foreign portfolio investment into government securities, and that has, to a large extent, supported the performance of their currency. In this country here, we are rather seeing the outflows of foreign portfolio investments because of the shortage of US dollar supplies in the market. So it is hard to compare them. What we just need is to look at, how they have been able to fix some of their problems from a fundamental basis instead of, looking at market forces.
Well said. Well,
and then we fix ours.
absolutely. Well, the World Bank and the IMF have always talked about some structural reforms, which includes unification of the exchange rate, and the central bank has made a significant move towards the convergence by adopting the NAFEX rate. But how much has this step solved the problem of illiquidity in the market, which is a major challenge?
To be honest, that move has not really solved the problem of illiquidity in the market. What I was expecting, was that if the CBN should move the rate as they did, they would supply aggressively to the market, just so that every segment of the FX market realizes that now we have liquidity, and so, there should be no need for unnecessary demand. There should be no need for an unnecessary movement in the rates in the respective market, whether you take a look at the official market, or you are looking at the BDC market, or you are looking at the parallel market. But we had that move by the CBN to 410 from like 379 without, a corresponding increase in supply to the FX market. So that was the major problem. And I am not going to even blame the CBN in this case, because there is a limit to which the country can go, to which the CBN can go in terms of depleting the FX reserves. So there are two key sources that we bear in mind that could support the ability of the CBN to supply US dollars to the market in the coming quarters. Number one is the possibility of receiving some loans from the World Bank. Number two is the possibility of us having of the country floating euro bonds in the market, about $3 or $6 billion in this case.
All right. Some people might argue that the Naira is overvalued. What for you should be the fair value, and what's the way forward?
Well, I think, the fair value of the currency is around, where the 1 year forward rate is. And that looks like around 440 to 450, Naira to a dollar in the official market.
All right.
Now, what is the outlook for the Naira for the remaining part of 2021?
Well, for the Naira in the remaining part of 2021, we believe that, number one, we will probably continue to see volatility in the market. If we do not see increased supply by the CBN, to the I and he window, for instance. Number two, our view is that, if we see increased inflows on the back of the CBN, getting more robust reserves. Number one, from the World Bank borrowings that I mentioned. Number two, from a possible Eurobond issuance, then the CBN will be better positioned to supply US dollars to the market. If these two do not materialize, it is unlikely that we see the currency strengthen before the end of this year. So at the parallel market, we could see it go as high as like 550 if we do not see increased supplies by the CBN to the BDC segment of the market. Currently, they supply $10,000 per week, to each BDC twice in a week. But that is coming from about $20,000 that they were supplying, to the BDC twice in a week around September last year. So we need more supply in the market for stability, but the supplies wouldn't come if the CBN does not see inflows or accretion to the FX reserves, because we need to protect the reserves and speak to the fundamentals.
All right, Tajuddin, before we let you off the hook, Central Bank is hinting at introducing digital currency, perhaps before the end of this year. What's the take of research analysts like you?
Well, for me, on digital currency, I think it is still, to my mind, early in the days to begin to form strong opinions. But what I believe really matters is for us to have digital currency, it means we are aligning the economy with global, advancement in that regard. And there is nothing that, it will bring for us other than, positive development in terms of banking, positive development also in terms of how consumers are able to do transactions seamlessly, and how the economy could further develop as new businesses should emerge when we adopt that digital currencies. So in the early stages, those are my views.
We'll have to leave it there now. Mr. Tajuddin Ibrahim is head research at Chapel Hill at Denham. Thank you so much for your time on Business Morning.
It's my pleasure. Thank you for having me too.
All right, time for our morning calls at the market now with Aniete. Well, the bull is not letting go of the market. It is believed investors are taking positions for the half-year dividend declaration. Am I right?
Good morning, Ladi. That's correct. You're correct. The markets, the bulls, certainly not letting go. And of course, because just like you rightly said, the dividend declarations as well as some earnings forecast for third quarter. So ideally, investors are taking position. And of course, month to date, we've increased by 2%, and then our year-to-date loss has been moderated to about 2.6%. But let me bring you up to speed with how the market ended yesterday. We're up again 0.10%, and that's the third consecutive rise on the market, gaining 20 billion naira. And so far, we've gained nearly 300 billion naira. And then, of course, if you take a look at the sectoral index, it was driven by the banking sector as well as the consumer goods. 3 tier 1 lenders, that was GT Bank Access, and then some consumer goods components. But the volume of transactions there was lower, as well as the value, but the deals were higher. So, but it just tells you that investors are still piling into the equities market. Well, let's talk to a stockbroker to bring us up to speed with some of the developments at the market. So let's talk to Mohammed Kaide, who is a stockbroker at APT Securities. Thank you for joining us, Mohammed.
Hello, good morning.
Good morning, Mohammed. Thank you for joining us. So now we have seen the bull not letting go so far, after starting the week negative, but it has sustained a bull run, if I would call it a bull run, for a third day. So now, what's driving this, bull run at the markets this week?
Thank you. It's a pleasure to be here on the program. I have actually opined in one of these sessions before that we are about to see a bull in the market. If you analyze the market technically, you will see that market has a trend that it moves. So I said in that session that we always have here to be close in the green. And as at that stage, we're losing about 5%, above 5% in the market. And I find that the market will come up with it. And I expect that the positive trend should continue. as we have it. First, because of the fact that our market is highly undervalued. Second, on the fact that the result, half-year result is coming on its way. And also, you see where we are today. Most of those that invested earlier in the year, they invested at a very high price. But as it is today, the market has come. So market has to find the level back to what we used to have. So, and we are projecting that by half year, the year today should be on the positive territory.
Okay, so now when you say that, at some points, even some traders are still, or some analysts are still calling for caution given the macroeconomic environment, as well as some uncertainties, even as also to consider profit taking. So what are the factors, or what are we to look out for, especially when you're trying to attract some investors into the market, whether portfolio investors or local investors? So what are the things to look out for, as we end the week and into next week? Look out for next week.
In the market generally, we have two information that driven the market. We have market fundamentals and we have economic fundamentals. These two go in pari. But what we are having now, we have our economic fundamentals to be trading at this level, and we see a situation whereby the market fundamental is positive, and that's the reason why you see all those stocks. I told you earlier, they are undervalued. So if you want to invest, even those people, those analysts, they should be taking profit from their investment. As far as I'm concerned, in as much as you have investment in stocks that have fundamentals, you are good to go. The only thing you need to do is to have long-term investment horizon. It's not something that you go in, come out today. When you plot your return, the length of your return on the graph, you see that investing for a long period of time is always a very good and nice one.
Okay. So thank you for giving us at least letting some of our intending investors, what to look out for. So thank you, Mohammed.
Thank you very much.
Okay. That was Mohammed Kaide, who's a stockbroker at APT Securities. So, Ladi, I would have given you more information about other markets, but just like it happens, no time. Still no time. Yes.
Anyway, I guess it's all about looking for those undervalued stocks and, finding positions, for the next run. Anyway, Anita, thank you so much for the update.
Pleasure.
All right, we'll take another quick break. When we come back, we'll do an opening call to London. Do stay with us.
All right, let's see what's happening in London. Juliana, good morning. Well, we'll begin with data this morning. UK economy up 2.3% in April. Good news, but growth still below pre-pandemic era.
Good morning, Chimizzy. Yes, growth is still below the pre-pandemic level, but it's only 3.7% below February 2020, which is the smallest size it's ever been. And I can tell you this is a very, very good start to Q2, which is going to be the quarter that everybody says is going to see the rebound in the British economy, making it the fastest comparative nation to come out of the pandemic. So we have seen this growth, and this has been fueled by many things. April, of course, was the start of non-essential retail and outdoor hospitality opening. This was the first full month that kids were back in school, lots of parents buying new uniform. We've been discussing the PMI data on this show over the past couple of months, looking at the private sector, services, construction, manufacturing, all rebounding in the build-up to this. So yes, this is a pretty good start. There are even some economists that are feeling pretty confident to say that they're expecting Q2 GDP to be even better than what the Bank of England have forecast of being about 4.7%. There are a couple of niggling areas. Services grew 3.4%, but we did see a slight fall in production and manufacturing. 1.3% fall in production. Manufacturing, I believe, is similar, pretty similar amount. But then there have been some that are saying because we saw an abundance of growth in March, perhaps the fallout is of this. But yeah, really great start, especially as obviously the G7 leaders are convening on the coast.
And of course, all eyes are on the G7 summit kicking up today. And Prime Minister Boris Johnson says UK and US relationship indestructible. What's the atmosphere like there ahead of this summit?
Well, unfortunately, I'm not in sunny Cornwall. I'm in central London. But from what I've seen, the atmosphere is pretty good. Yesterday, there was a lot of fist pumping, lots of walk on the Cornish seaside between the Biden family and the Boris Johnson family. A lot of people were worried. We know that Biden isn't necessarily a big fan of the populist leader, Boris Johnson, but the White House very quick to put out a statement saying the special relationship is intact. And that's exactly what Boris Johnson needed, because, of course, he's got the heads of the EU arriving just moments ago. French President Emmanuel Macron, fresh from having that pretty awful slap around the face. He is in the UK, and he has said that he is not going to budge one bit when it comes to allowing a freedom of flexibility around this Northern Ireland protocol. That is going to dominate discussions this weekend, especially because you've got the outgoing Chancellor Angela Merkel and Ursula von der Leyen, the EU Commission President, who will be on the shore separately. Vaccination, massive talking point. Some stats from the Financial Times suggest that 45% of the wealthiest nations have vaccinated 45% of their adult population, in comparison to just 2% in Africa. They are talking about this a lot in the British media today, so they want to get a consensus around that. So yeah, big day, big weekend. A great way to start with those strong GDP figures from Britain.
Well, I guess you have quite a lot to churn out today, and so we'll get more update at lunchtime. Business Incorporated. Okay, let's look at the crypto market. Well, Ladi, international banking regulators' decision to classify Bitcoin as the riskiest of assets dragged cryptocurrencies further into the mainstream financial world. So, shall we say there is something for crypto evangelists and something for the critics here? By the way, the Central Bank of Nigeria is planning to launch its own digital currency.
Exactly. So, you know, different news coming in for Bitcoin at this time. And what I've noticed as the news comes in, you get Bitcoin actually, you know, jumping in price. Then you have major sell-offs, you know, bringing it back down. So it is quite
like that of,
very interesting.
IMF, like that of IMF talking about El Salvador making Bitcoin legal tender.
Very risky, yes. They've cited concerns there. So we might see, you know, a little, you know, shake off in the market because of that. Because when IMF actually talks about Bitcoin, it actually has a big effect on the market. Well, what we can see this morning, Bitcoin is practically the only one in the green at $37,243. Others are in the red. Other altcoins actually down by double digits. And usually Fridays, we usually have a red Friday, but this Friday is quite mixed with Bitcoin, you know, in the green. We have a $1.57 trillion market cap, down about 2.73%. 24-hour volume is quite low. This morning, about $100.42 billion traded. But Bitcoin dominance is inching up there, 0.83%. Price of Bitcoin, we have a 24-hour volume for the $2.91 billion traded in Bitcoin this morning. Ethereum is down 5%, king of the altcoins. 24-hour volume, 27.46 billion traded. Top alts by market cap, they're all down on that counter. We have BNB down 3.57% at 351. Cardano is also down 4.90%. Dogecoin down 4%, and XRP still below $1 at this point. Let's talk to Michael Enaji now. Hello, Michael.
Hello, Ladi. Good morning.
Good morning. Great to have you. Happy Friday, Michael. It's funny we don't have a red Friday today. Is it because of this flurry of news coming from IMF, you know, categorizing Bitcoin as a riskiest asset?
Yeah, so the news basically started with El Salvador last week in the Bitcoin conference. They announced in the conference that they were going to be passing Bitcoin as legal tender. And so Ecuador is in a unique situation. In the early 2000s, because of hyperinflation, they actually moved from the U.S. dollar, from the El Salvador dollar to the U.S. dollar. And so as a result of that, culturally, they're used to switching, basically having a currency that's not theirs. Having a currency that's not theirs being used as the base currency because of hyperinflation. So they are in a very unique position to adopt Bitcoin and start using it. But the FUD from the IMF and all these other institutions results mostly from them having just a little bit of pushback in terms of what their fear is for the financial system. There's a recognition that, you know, if done right, Bitcoin could potentially replace like IMF loans and all these other kind of things, because the IMF is giving El Salvador pushback because they asked for $1 billion, but Bitcoiners are actually trying to create like $1 billion loan facility for a Bitcoin mine that's volcano powered. So you have this really big clash. So that's why the IMF is trying to basically speak ill of cryptocurrencies. The Basel requirements, they're trying to report it as risky as one of the riskiest assets.
Mm-hmm.
So at the end of the day, this pushback from the IMF is coordinated because at the end of the day, they don't want to lose power over currency. But Bitcoin basically gives for a new paradigm where no one is in charge of currency anymore, and it's something that can be decided without having the IMF, be the decision maker.
Okay. All right, Michael. Always great to talk to you. Thank you so much for your time on the program.
Thank you so much, Laddie.
All right, Jimmy, there you have it.
Well, the most important thing is that the regulators globally are beginning to recognize cryptocurrencies as
an asset.
Assets.
Yeah.
That's the most important thing. That's the
Quite
major takeaway from the meeting, yesterday. However, the only consistency, here has been the volatility. So if you believe in it, you're probably to stomach the volatility.
Exactly.
But if you're just in it because it seems like the hot way to get quick money, that volatility is going to be hard to deal with.
Exactly.
Anyway, it's a weekend, and we thank God it's
Friday.
That's a wrap on the program. There'll be more update for you on developments in the world of business. That's at 1:30 p.m. on Business Incorporated. Thank you for watching. I'm Chimizi Obi Iwagu.
And I'm Laddie Williams. Have a great weekend.